And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here, taking you through to that closing bell with the global simulcast. Joining us right now from the radio booth is Massar and Tim Stenovec. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. I hate to tell you this, Tim. We had to fire her. Sorry.
Wait.
No, that's a joke. I'm sorry.
I thought Matt Miller was
She's on assignment today, so Katie will be back in a couple days.
Okay,
Don't
she's
worry.
back in a couple days.
No, we love Katie.
I thought Matt Miller was going to be with you.
So we take a look at the markets here today, and we talk about a market that is still sort of clinging to,
chilly in here,
modest gains. But we talk about 2 straight days of gains, and S&P actually not far off from reclaiming its record high. But this isn't the sort of meaningful all-in the pool oomph that we saw earlier in this rally cycle.
Yeah, not a lot of oomph, if you will. But we will say there's more names in the S&P that are actually gaining some ground today. But it's kind of a weird market. I keep going. I think we're just waiting. Want to hear from the Fed, what insight they have into 2026, and kind of where we go from there.
I just want to prove I don't only talk about cryptocurrency when it's down. Bitcoin today up 1.5%, above 92,000, close to 93,000.
Equal opportunity crypto person.
Yeah, we've been keeping a close eye on it, so worth repeating.
Interesting to see that trying to bounce back, trying to reclaim some of that magic. 2 interesting stories, though, to keep an eye on. Not a whole lot of movement in rates, but a huge downdraft today, once again in the dollar. And then also, you're seeing a huge bid higher in a lot of the bank stocks today, which also seems to be tied to what we've been seeing in the yield space here. As we head into next week, a week from today, where we finally get that Fed decision that most investors seem to believe will include a 25 basis point cut. The closing bells here in New York, and it does appear to be green across the screen, across the board. The Dow Jones Industrial Average up about 0.9% here on the day. The S&P 500 adding about 21 points, or about 0.3%. The Nasdaq Composite only up a smidge, and this is actually the story here. Big tech, the big laggard on the day. The Nasdaq Composite and Nasdaq 100 each only up by about 0.1 or 0.2% here on the day. But your outperformers on the day, and this should maybe provide some sort of comfort. Dow Transport's up 2% on the day, and the Russell 2000 up 1.9.
Wow, some significant outperformance there. Hey, let's go back, though, to the S&P 500. I mentioned most names in the index higher today, 337 to the upside, remain 165 to the downside, 1 unchanged.
And of course, we talk about sort of what led that charge. It was energy, it was financials, it was industrials, it was consumer discretionary, all posting pretty sizable gains here on the day. But the big laggards on the day, you saw that in communication services, which is largely a lot of the companies like your Metas, if you will. You saw that in utilities, and you saw that in the S&P Infotech Index, which includes all the biggies, all those biggies here, down as a group by roughly about 0.4%. Now, speaking of the biggies, Carol, we are getting some earnings right now out of Salesforce.
Yeah, we are indeed. So let's go through the numbers, folks. Let's go right to the forecast. Salesforce seeing fourth quarter revenue, $11.13 billion to $11.23 billion. And folks, that is easily above the street estimate. And that's probably why you're seeing the stock up about 6% here in the aftermarket. $10.91 billion is the estimate. Let me go back to the third quarter. Third quarter adjusted EPS, that was a big beat. $3.25 a share versus the estimate of $2.86 a share. Also, if I take a look at third quarter revenue, that was pretty much in line, $10.26 billion versus an estimate of $10.28 billion. But again, all right, so pulling back a little bit on the gains, but remains still up about 4.7%. So investors liking what they got in terms of that forecast.
And I just want to stay on Salesforce for just 1 second, because there was some concern, you guys, coming into this morning with that report from the information about apparently Microsoft's salespeople had missed, at least in the first half of the year, some of their AI sales targets. That actually led to a downdraft in both Microsoft and the broader market. Microsoft pushed back on that, and we saw a big bump up. So there are a lot of concerns about what we would hear out of Salesforce. This also comes on a day where we heard from the Anthropic CEO at a New York Times event saying that he thought some of the spending on AI had maybe gotten a little bit too risky, and some reports out of that Morgan Stanley was actually looking to do a strategic risk transfer in some of the loans tied to that data center build out.
Yeah, just back to Salesforce and staying on Salesforce, up 8.3% in the after hours. Revenue for the fourth quarter, the guidance beat the average analyst estimate. Fourth quarter forecast sees revenue 11.13 to 11.23 billion. That's ahead of estimates of $10.91 billion. The estimate for adjusted EPS was for $3.03. That coming for $3.02 to $3.04, so right in line with estimates. The company sees the current remaining performance obligation up at 15%.
Yeah, we're going to dive deeper into this, but yeah, on the surface, these numbers look pretty good. It'll be interesting to see what the Mark Benioff and his team has to say on the call here. The idea of AI adoption, and of course, a company in Salesforce that has really bet the farm on it going forward. Meanwhile, we are getting some other earnings. This out of the retail space, Five Below, the retailer out with its earnings, and it does look to be a beat and a raised quarter. The shares had a decent little pop just a few minutes ago, pairing some of those gains. The company saying that in the most recent quarter, net sales did come in up about 23% at about $1 billion even. That's above the average of analyst estimates. The company guiding for the next quarter, the current quarter, the fourth quarter right now, seeing a guidance of net sales in the range of 1.58 to 1.61 billion. The low end of that range is above the average of street estimates. Similar story, Carol, when it comes to the EPS range, with the low end of that range higher than the average of street estimates.
So important in terms of what it's telling us about the U.S. economy, the consumer, the retail reads. I want to go back, though, to Salesforce, if I may. We've got a great write-through on the Bloomberg by Ardina Bass and Brody Ford. Again, the company giving an outlook for revenue in the current period that topped analyst estimates, suggesting the software company is persuading customers to buy its AI tools. The company's AI tool, it's called Agentforce, has closed more than 9,500 paid deals since its launch, with the annual recurring revenue for the division that includes AI-focused tools being $1.4 billion in the period ending October 31st. So again, that AI trade, Romaine mentioned, like some concerns maybe heading into these earnings, but it looks like Salesforce is definitely delivering, Tim.
Yeah, Mark Benioff calling out that 9,500-page Agentforce deals. He also says 3.2 trillion tokens processed. Some other numbers that he highlights in the press release, and of course we'll get more potentially on the earnings call, raising the fiscal year 2026 guidance, signaling a powerful pipeline of future revenue. Agentforce and Data 360 products, their momentum drivers, hitting nearly $1.4 billion in annual recurring revenue.
Yeah, we should point out, coming into this session, actually one of the worst performers in the Dow Jones Industrial Average on a year-to-date basis, and that caused some concern here. But at least the customer relations software company looks to get its mojo back. Meanwhile, we want to take a look at some of the database architecture companies, and that includes Snowflake. It's just out with its results right now. Those shares actually moving lower, down about 5% here in the after-hours trade. Here's what the company has to say with regards to the most recent quarter. It basically says that in the most recent quarter, revenue did come in line with estimates at about $1.16 billion, EPS at 35 cents. That's about 4 cents higher than what the street was looking for. For the fourth quarter, the company says, though, that product revenue will be in a range of 1.2 well, there is no range. It will be $1.2 billion, and that's basically on the nose of what the street was looking for. The company also says full-year product revenue, 4.45. That's slightly higher than what it forecast before, but only a smidge higher than what the street was looking for. And maybe that's why you're seeing some softness in the shares. I'm
looking at another company reporting after hours. AI US is the ticker, C3 AI. It's the application enterprise software company. Shares bouncing around in the after hours, but down 2.8%. In terms of the numbers, C3AI second quarter adjusted loss per share of 25 cents. That came in ahead of estimates at 33 cents. The company sees fiscal year revenue 289.5 to 309.5 million. That's very much below what it saw earlier, which was 447 million to 484.5 million. Second quarter revenue came in above estimates at $75.1 million. Once again, and now actually the company sees the third quarter revenue 72 to 80 million. The estimate was for $75.6 million. Shares in the after hours down about 1.4%.
All right, so seeing a lot from certainly the tech community. I want to go back to the retail community. Five Below, Romaine breaking it down earlier. This is a stock that's up almost 60% year to date. The stock now up about 1.5% in the aftermarket. So it's been bouncing around a little bit. Going to the outlook, the company seeing fiscal year EPS of $5 $5.51 to $5.69. It had seen $4.56 to $4.96. The estimate was below $5. So it looks like investors certainly feeding into that one and liking it, Romaine.
And this raises a lot of questions. I mean, we're basically through the earnings season. I mean, this is it. We get a few tomorrow, like Dollar General and Hormel, and I think DocuSign and HPE, Ulta Beauty as well. But we've kind of got the read now on what's going on with business spending, what's going on with consumer spending. The quarter's over. And it looks like overall it did better than what most people had thought.
Yeah, I think you're right. But I have to say, when it comes to retail, like you guys, we've done a lot of interviews on that. And it just feels like everybody talking about the consumer, spending, but being cautious. So anything that puts any more additional pressure on a consumer, I think we could see some problems. And we'll see whether or not they get an assist perhaps from the Fed in lower rates and how that can trickle through certainly the economy.
Yeah, just a reminder, like the big picture that we've gotten from these retailers has been this bifurcated consumer where the high-end consumer is still spending and even the middle-income consumer is trading down. And look at what we saw from some of the dollar stores as a result.
Five Below, up about 2%. You've got Salesforce guys up about 4.5%. Snowflake right now down about 6.5%. So watching all of this here in the aftermarket.